Welcome back to the show. I want to start today with a number that, when I first ran the math on it, made me stop and just stare at the wall for a minute. I'm not exaggerating. In 2020, central banks around the world panicked. The pandemic hit, the economy froze, and they reached for the one tool they always reach for in a crisis. They turned on the printer. In a very short window, the US created roughly $6 trillion out of thin air. 6 trillion. A 6 followed by 12 zeros. A number so large the human brain can't actually visualize it. Now do something with me for a second. Take that 6 trillion and divide it by $60,000, which was the average American annual wage around that time. You get 100 million. 100 million years of human labor. Then divide that by 50, because that's roughly how long a person works in their lifetime. From their first job to retirement, the answer is 2 million. 2 million entire human lifetimes of work, extracted in a few months. No bank robbery, no broken vault, no ski masks, just a button on a computer. Sit with that for a second, because that's what we're really talking about today. When you grow up, you're taught a very simple story. You go to school, you get the job, the paycheck shows up, the numbers go up in your bank account. Do the work, get the reward, clean equation, clean transaction. But have you ever noticed how that math stops working as you get older? You make more than your parents did at your age. You're doing all the things you were supposed to do, and somehow you're not actually getting ahead. Rent eats more, groceries cost more. Owning a home keeps drifting further away from you, no matter how fast you run at it. That's not in your head. That's not because you're bad with money. The math you were taught is broken. It's been broken for a while. And the most dangerous part is that the brokenness is carefully designed to look like the system is still working. So today I want to do something a little ambitious. I want to take you all the way down, all the way to what money actually is and how the modern financial system actually works under the hood. And then I want to bring you back up into something much more personal, because here's the punchline I'll spoil right now. Understanding how the system extracts value from you only matters if you know what to do about it on Tuesday morning. And what you do about it on Tuesday morning is more intimate than you might think. Let's start at the beginning. If you put most of us on the spot, we'd say money is the paper in our wallet or the digits in our banking app. We use it every single day without ever really defining it. There's a thinker named Robert Breedlove who offers a definition that cuts through everything. He defines money as pure optionality. That sounds abstract, so let me make it concrete. You are a human being walking into the future. You don't know what's coming. Tomorrow could bring a pandemic. Your industry could get reshaped by AI overnight. Your car could break down. Your kid could need braces. You don't know. So what's the smartest move when you can't see what's coming? You preserve options. You stay ready for as many possible futures as possible. Here's the analogy that finally made it click for me. Imagine you're standing in a field looking at the horizon, and you don't know whether tomorrow's going to bring a torrential rainstorm or a parching drought. Both are possible. If you spend all your resources stockpiling umbrellas and a drought hits, you're in trouble. If you stockpile barrels of water and a flood hits, you're also in trouble. Your capital is locked into the wrong solution before you knew which solution you needed. But if you hold money, if you preserve it instead of spending it on a guess, you keep the choice open. When tomorrow arrives and the fog clears, you can buy whatever the situation actually calls for. Umbrella, water, or something you couldn't have predicted at all. So money at the deepest level isn't paper, it's freedom. It's stored energy you can deploy in any direction. It's the ability to respond to whatever life throws at you instead of being trapped by it. Hold on to that definition. It changes everything about how you think about your career, your savings, and what you're really chasing. Now, I want to go one level deeper, and this is the part where you might want a sip of coffee. There's a concept from the cognitive scientist John Vervaeke called the transjective. Once you see it, you can't unsee it. We're taught from grade school that the world is split into two clean categories. The objective stuff, gravity, rocks, the temperature outside, the things that don't care about your feelings, and the subjective stuff and your thoughts, your dreams, your inner experience. Two boxes, everything goes in one or the other, but that's not actually how reality works. The most important parts of human life live in a third space, the space between objective and subjective, where the two interact. That's the transjective. Think about love. It's not purely in your head. Your heartbeat, your chemistry, the person standing in front of you are all real. But it's not purely out there either. The meaning lives in the connection between you. Love is transjective. It happens in the bridge. Money is the same. A $100 bill is objectively a piece of paper, but its value, its purchasing power, is entirely subjective. It only works because you and 300 million other people collectively agree it does. If we all woke up tomorrow and decided it was just paper, it would be just paper instantly. Money is the bridge between your inner subjective desire, I'm hungry, I want lunch, and the physical, objective world of atoms, the farmer who grew the wheat, the baker who made the bread. Without that bridge, your hunger stays trapped inside your head. With it, your hunger reshapes the world. And here's where it gets beautiful. Notice that almost every word we use for money is a water word. Liquidity, cash flow, frozen assets, pooling resources, floating a loan. Why? Because reality, at the deepest level, isn't static. It flows, it moves, it seeks equilibrium. Money is the liquid medium through which human action moves through the world, okay? Hold all of that, money as optionality, as the bridge, as flowing liquid energy. Now we can ask the real question. If money is just a flowing tool for human cooperation, why does everyone feel like they're drowning or dying of thirst? Why does it feel like there's never enough? To answer that, we have to talk about a word that's gotten a really bad reputation lately: scarcity. If you spend any time in the self-help corner of the internet, you've been told to banish scarcity from your vocabulary. Scarcity mindset is treated like a disease. You're supposed to think only in abundance, manifest wealth, vibe higher. There's a real psychological truth in that. And we're going to come back to it in a big way later. But we have to be careful because there are two kinds of scarcity, and confusing them will get you nowhere. Psychological scarcity, the fear that you aren't enough, that there's never going to be enough for you, is something you should absolutely work on. It will sabotage your life. But economic scarcity is not a bad attitude. It's a fact of physics. The universe contains a finite amount of wood, steel, oil, attention, and time. Most importantly, your time is finite. You will die. That's not a vibe, that's a constraint. Economics is just a study of how humans navigate that constraint, of how we spend our limited time and resources when our wants are basically infinite. You stand up off the couch to get a glass of water because you're in a state of lack. If you were infinitely full, infinitely satisfied, you'd never move. Scarcity is what makes you act. So when you do act, when you're out there in the world trying to acquire what you need, how are you doing it? Because there are really only two ways to play the game. Way number one, consensual trade. You and another person both want something the other has. You meet, you swap, you both walk away better off than you started. That last part sounds obvious, but think about why it works. If you and I had identical things, the same blue coffee mug valued the same way, we'd never trade. The friction wouldn't be worth it. Trades happen because we value things differently. I want your iPhone stand more than I want my mug. You want my mug more than your stand. We trade, and now both of us have something we wanted more than what we gave up. That means in a real trade, both sides win. Have you ever had the double thank you moment? You buy a cup of coffee. You hand the barista $5, she hands you the coffee. You say thank you. She says thank you. Both of you mean it. Both of you walked away with something you wanted more than what you gave up. That is 1 + 1 = 3. Value got created out of thin air just by moving a cup of coffee from someone who didn't want it to someone who did. That's what a healthy economy looks like at the cellular level. Billions of these tiny double thank you moments compounding into wealth for everyone involved. Now meet the other model, the coercive one. Someone takes what they want by force, fraud, or coercion. The simplest example, a mugger in an alley. Give me your wallet. The mugger gains, the victim loses. That sounds like zero sum. One person up, one person down, net zero. But it's actually worse than zero sum because trust got destroyed. The victim has medical bills, therapy, fear. People stop walking down that street. Businesses lose customers. Capital flees. In an extractive transaction, the pie doesn't just get redivided, it shrinks. 1 + 1 = 1/8. Sit with that one for a second. Don't answer too quickly. Because if free markets naturally create abundance, we have to ask the obvious question. Why does the modern world feel so squeezed? Who broke the math at scale? The answer is in the history of banking. I'm going to walk you through this slowly because the phrase fractional reserve banking is basically engineered to make your eyes glaze over. The complexity is the disguise. So let's strip it away. Hundreds of years ago, a bank was just a vault with armed guards. You're a medieval merchant. You've got 100 ounces of gold. Gold is heavy, hard to transport, and very robbable if you keep it at home. So you take it to the local goldsmith, who has a big vault. You deposit your gold. He gives you 100 paper receipts that each say redeemable for 1 ounce of gold. The receipts are amazing, light, pocket-sized. You can use them to buy a horse, and the blacksmith trusts that he can walk down to the vault and trade them for real gold anytime he wants. Here's the key thing. The paper wasn't the money. The paper was the map. The gold in the vault was the territory. The paper was like a coat check ticket. It's not your jacket, it's just a claim on your jacket. As long as the goldsmith kept a 1-to-1 ratio, 100 ounces of gold in the vault, 100 receipts in circulation, The system was clean, honest, ethical. But the goldsmith notices something. People rarely come back to redeem the gold. They just keep using the paper. The gold sits in the vault, gathering dust, and a very tempting idea forms. What if I just print another 50 receipts, lend them out to the local farmer at interest? The vault still has 100 ounces of gold. As long as nobody checks, who'll know? That moment is the birth of fractional reserve banking. The bank now has 150 paper claims circulating, but only 100 ounces of gold in the vault. 50 of those receipts are ghosts, claims on gold that doesn't exist. When you or I do this on print paper claims to money that isn't there, it's called counterfeiting, and we go to federal prison. When a bank does it, it's called credit expansion. But mechanically, it's the same thing. A pyramid scheme held together by confidence that no one will check the vault all at once. For centuries, this system was constrained by the fact that physical gold was still in the vault somewhere. If the bank got too greedy and people lost trust, there'd be a bank run and the bank would collapse. Reality had a tether. That tether got cut in 1971, when under President Nixon, the US dollar was officially severed from gold. Before 1971, there was at least some gold in a vault somewhere backing the dollar. After 1971, there was zero. We moved into what's called a fiat system. Fiat is Latin for let it be done. The money has value because the government says it does and because you're required to use it to pay your taxes or else go to jail. Now, there is no physical constraint on creating money, no gold to dig out of the earth, just buttons on a computer. When the supply of paper claims grows by 40% and the supply of actual physical stuff, milk, eggs, gas, houses, stays the same, the prices have to go up. That's not greed, that's arithmetic. The ice cream didn't get more valuable, the dollar got worth less. But it is much, much easier to be mad at the manager of your local grocery store than it is to think about the balance sheet of the Federal Reserve. So that's exactly where the blame gets directed, by politicians on every side, always. Okay, deep breath. If you've been listening to this and you're starting to feel a little hopeless, I want to acknowledge that. The macro picture is dark. You're working 40, 50, 60 hours a week, storing your life force in a container that has a mathematically guaranteed hole drilled in the bottom of it. What do? You don't give up, you look for an exit. The source material points at one, Bitcoin, not as a get-rich-quick scheme, not as a tech stock, but as the first monetary system in human history with absolute mathematical scarcity baked in. 21 million coins. No central authority can ever print more. The supply is locked. It's the island with 100 apples, except now the banker is locked out of the printing press forever. I'm not going to pitch you on Bitcoin today. That's a separate conversation, and reasonable people land in different places on it. But it's worth knowing the exit ramp exists and that people are taking it. So now we have to look inward, because the second half of this, the part that's actually going to change your life on Tuesday, has nothing to do with central banks. It has to do with the wiring inside your own head. I want you to do something with me right now. Honest gut check, no judgment. Have you noticed a specific number in your life that you can't seem to get past? A salary level, a savings amount, a monthly revenue, a net worth figure. Some place where things just keep stopping, no matter what you do. Sit with that for a second. Don't analyze it yet. Just notice if a number came to mind. Because if one did, and even if one didn't, what we're about to talk about is going to matter to you. There's a principle from physics called entrainment. And once I understood it, I started seeing it everywhere. If you take a tuning fork and strike it so it vibrates at a specific frequency, let's say 440 hertz, the musical note A, and you place a second totally still tuning fork next to it, something strange happens. You don't touch them, you don't connect them, but within a few minutes, the second tuning fork will start to hum and then vibrate at the exact same frequency. The first fork entrained the second. The stronger vibration pulled the weaker one into harmony with it. This isn't a metaphor, this is real physics, and it happens everywhere in biology. Women living in the same dorm sync their menstrual cycles. A crowd in an auditorium starts clapping randomly, and within a couple of minutes, the entire room falls into a rhythmic beat without anyone organizing it. Your heart rate matches the music you listen to. Your breath synchronizes with the person sitting close to you. You've heard the phrase, you are the average of the 5 people you spend the most time with. It sounds like a cheesy motivational quote. It's not, it's physics. You are constantly synchronizing, biologically, behaviorally, neurologically, with whatever frequencies are around you most often. Now apply that to your inner life. What you rehearse repeatedly inside your own head, the dominant frequency of your own thoughts, pulls your external reality toward it. If the dominant frequency inside you is, I'm not enough, I'll never make it, money's dangerous, success isolates you, then guess what your bank account is going to look like? It's going to entrain to that frequency. You will unconsciously miss opportunities, push away mentors, sabotage trades, hit ceilings. Your wallet matches your wiring always. Did you grow up watching a wealthy uncle treat people badly, and somewhere deep down your brain wired wealth equals cruelty? Did you bond with a struggling parent over shared financial stress, so now part of you associates being broke with closeness, with love? Did you grow up being told that rich people are greedy, so now your subconscious thinks getting rich means becoming the enemy? You probably can't answer those questions just by thinking about them. The whole point of these beliefs is that they're hidden. They run the show from underneath, but you can notice the patterns. Where do you self-sabotage? What numbers do you keep hitting walls at? Where does your behavior contradict what you say you want? That's the doorway in. Once you start finding those hidden beliefs, the natural question is, how do you replace them? Because just knowing something is wired wrong doesn't change it. We've all read the books, we've all tried to manifest. Most of it doesn't work. Why? Regular imagination is passive. You sit on the couch, close your eyes, picture a sports car or a sailboat. You observe a mental movie, but you stay outside it. You're the viewer, the car is the object. There's no real change happening to you. The imaginal is active, participatory. You don't just picture it, you step into it. You play the role. The cleanest example is a kid with a cape. When a 4-year-old ties a towel around his neck and runs around the yard, he isn't sitting on the couch picturing Superman. His posture changes, he stands taller, he lowers his voice, he runs differently, he becomes the hero in that moment. That's the imaginal. That's why kids learn so fast. They embody what they want to become. The application to your life is exactly the same. If you want to be the kind of person who has options, who has wealth, who has freedom, you don't just sit and picture it. You rehearse the posture, the decision-making, the way that person walks into a room, the way they handle a setback, the way they say no to things that don't serve them. You are, in a very literal sense, brainwashing yourself toward abundance, overriding the old programming with a new pattern. And this is where so many self-help books quietly stop talking. That override doesn't happen through thought alone, it happens through action. You have to physically do the thing. Which brings us to the final piece of this puzzle. There's a piece of neural architecture in the human brain called the anterior mid-cingulate cortex. Mercifully, scientists call it the AMCC. The recent science on it is some of the most exciting stuff in neuroscience right now. The AMCC is, in a very literal sense, the muscle of willpower. It's the part of you responsible for tenacity, grit, the ability to keep going when you don't want to. And here's the wild part. It physically grows, like a bicep. It gets bigger when you exercise it, but not in the way you might expect. The AMCC does not grow when you do things you enjoy. It grows specifically when you do things you don't want to do, or when you actively resist doing things you very much want to do. If you love running and you go for a 5-mile run, that's great for your heart. It does nothing for your AMCC. But if you hate the Stairmaster, and I mean genuinely hate it with every fiber of your being, and you force yourself to do 20 minutes on it anyway, your AMCC physically gets bigger. If you're sitting on the couch at 11 o'clock at night, desperately craving a giant bowl of chocolate chip granola, and you consciously override that urge and walk away, your AMCC gets bigger. You are, in those tiny moments, building the literal biological engine of grit. The thing that lets you keep going when everyone else quits. The thing that lets you push through the moment of friction that separates the people who break through from the people who stay stuck. Now, I want to be honest with you, because if you've been with me this whole episode, you might be feeling some whiplash. We started with the macro extraction of human labor by central banks, and now I'm telling you the solution involves not eating granola at midnight. How does that actually protect you from inflation? Here's the connection. To escape the gravity of the extractive system. To generate enough excess capital to invest, to build a business, to actually secure options for yourself and your family, you have to become a relentless producer of value. You have to execute when things are hard, when the economy is down, when clients say no, when you've been working all week and there's still one more thing to do. The AMCC is the engine that lets you do that. If yours is weak, you'll retreat to comfort every time. You'll stay in the job you hate. You'll let the system slowly inflate you away. By building the AMCC in tiny moments, the Stairmaster, the late-night granola, you're building the grit you need to win at the macro level. You're building proof through reps that you dictate your reality, not your fears, not the central bank. Here's the math that should make you very excited. If you improve yourself, your skills, your habits, your output by just 1% every single day, you don't end up 1% better at the end of the year. you end up 37 times better. That's the magic of compounding applied to a human being instead of a savings account. We all know compounding interest is the eighth wonder of the world in finance. Almost nobody applies it to themselves. So what does that look like in practice? Specifically, concretely, on Tuesday morning, the source gives one challenge that I love because it's so disarmingly small. Here it is. For 60 seconds a day, every single day, you pull out your phone, you flip the camera to selfie mode, you hit record, and you talk unedited for 60 seconds about whatever's on your mind. A business idea, a lesson you learned, a struggle you're working through, no script, no ring light, no edits, and you post it every single day. The point of this is not to become an influencer. The algorithm does not matter. The point is to slay the resistance in your own head. Because what happens? It hits 11 o'clock at night. You haven't done your video. You look in the mirror and think, I look terrible. I have nothing interesting to say. My friends are going to think I'm weird. I'll skip today and do 2 tomorrow. That voice in your head, that's the resistance. That's the scarcity wiring trying to keep you safe and small. When you hit record, despite that voice, you're flexing the muscle. You're proving to yourself that you act anyway. You're stepping into the imaginal, becoming the person who executes, and your AMCC physically grows in the process. 60 seconds, 1% every day. So here's where we end up. We started today by looking at how the modern financial system quietly extracts 2 million human lifetimes of labor through a button on a computer. We traced that back through medieval goldsmiths, through 1971, into the system you're living in right now. We saw that the only real escape from that gravity is to play the inner game, to identify the hidden beliefs that are entraining your bank account to your fears, and to physically rewire yourself day by day through the imaginal and through the small, deliberate friction that grows the muscle of grit. We spend so much time and energy worrying about the inflation of the dollar. We stress about devaluation. We blame politicians and bankers we will never meet. But the real silent killer of your freedom isn't the inflation of the currency, it's the inflation of your excuses. Every day, the list of reasons you have for not doing the thing gets a little longer. The friends you're comparing yourself to, the timing that isn't right, the energy you don't have, the day you'll start when you feel ready. Each one is a tiny printing press, quietly diluting the value of the only currency you actually own, your time. So here's the question I want to leave you with, and I want you to genuinely sit with it before you do anything else. If your AMCC physically grows every single time you slay the resistance in your own head, what is the one uncomfortable thing you've been putting off, the conversation you don't want to have? The workout you keep skipping, the project you keep meaning to start, the post you're afraid to publish. That thing, the one that just came to mind, is your training ground. That's where the muscle gets built. The resistance is waiting for you tomorrow morning. The choice to confront it and build your own optionality is, as it always was, entirely yours. Thanks for going down this one with me. Pay attention to who's holding the keys. I'll see you on the next.